In this video, I'm going to explain how to trade spikes. So if you are new to this channel, make sure you subscribe to our YouTube channel. If you want to join our Telegram channel, just click more on the caption and you use the link that is in the description. I'm going to be explaining many strategies so that you can understand how to trade spikes. Trading spikes is very easy when you are using the right strategy. So make sure you watch this video until it ends. Comment ready if you are ready to trade spikes. So I'm now going to explain the strategy that you can use when you are trading spikes. So guys, today I'm going to be showing you a very good strategy that you can use for you to trade spikes. It's very easy, guys. So I want you to pay attention to each and every step that I'm going to explain. So let's go. First thing, if you want to trade spikes, let's say it's a gain. As for me, I trade using weltrade and derivative. So let's say you want to enter your trades. This is how you're gonna do it. First thing is you need to check the H1 time frame, because I always tell you to use top to down analysis. So what are we going to do? We're going to open our H1 time frame so that we see what is happening there. So here we have gained 600 and we want to see the overall trend of the market. So if you can see clearly, you can see it's something like this. Gain 600 has been moving well and it was going up. But if we check to what is currently happening now, we can see that today it moved a bit, but overall the market is going down. So in this kind of a scenario, what are you going to do? You have to use top to down analysis and see what is going to happen. So here we can say the market was dropping, right? Then it started to go up, right? Then suddenly it's now retracing. So which means the easiest way for you to catch spikes when the market is like this, how are you going to do it? Let's see the entry point we are going to use. So first and foremost, we have something like this, right? So I want to go on a smaller time frame so that I see whether we can get an entry here. So we are now moving on to M15. Just because the market is now dropping, you can see it. The market is dropping, right, guys? So just because the market is dropping, in when you check on the bigger time frame, it simply means that the spikes we are going to catch, we're not going to hold those trades. Why? Because the market is going down. So if you want to catch spikes the easy way, you should only look for the entries when the market is going up. For instance, here, let's say if you had seen that trade around this point, we were going to enter. Why? Because the market is what is going up and the market was bullish. So here we can see that the market is now bearish. So for us to try to catch spikes here, it's very risky. So if you want to enter here, you need to make sure that you have a bigger account that is going to make you hold the trade, because most of the times when the market starts to behave like this, it means the market is now dropping. So avoid entering trades when the market is now dropping. So here we're going to try to look for patterns that you should look for when you want to enter. So here I'm going to explain more about this pattern. So here you can see that we have something like this. Then it went up. So here we can see that the market was playing around the same zone. For instance, here this is the point that I'm talking about. Then here this is the point that I'm talking about. Then here this is the point that I'm talking about. Then all of a sudden it went up. You can see that. So this kind of a pattern, usually, how are you going to use it? This kind of a pattern, you need to only wait for it to reach a zone where you can you can enter. Avoid entering your trades when the market is at the top like this. Let's say you want to catch spikes, then you say you want to enter the trades here. You have to wait for it to go back to the order block where the whole thing started, because this is the zone with a lot of resistance. So in the event that you want to catch these spikes, you have to wait for it to reach the zone with a lot of resistance. As you can see, this is the zone I'm talking about, right? So what are we going to do, guys? We're going to mark this zone.
This is the zone I was talking about, right? So let me mark it so that we can all see what is happening there. We can all see what is happening there. So we're going to need a something like this. So this is the zone I was talking about. You can see that the market was playing around this zone. How are you going to know that the market is going to continue going up? Usually, the easiest way is to do this. When you see that the market has crossed this horizontal line, we're going to put a horizontal line here. Let's say you've seen that your market has crossed this zone. Because we can all see that around this zone, the market was retracing a lot. So once it crosses that zone, the easiest way is to wait for it to create a upward channel like this. This will be called the ascending channel. So you have to wait for it to create the ascending channel so that you can see whether you can enter that trade or not. So once you see that it's now making an ascending channel, you are going to draw what we call the parallel channel. So you are going to put a parallel channel like this. This is what you're going to be using to catch spikes. So you can see that this is an upward movement, right? So if it touches this trend line at the bottom, you enter. Then you take your profit. You wait for it to touch this trend line again. You enter. You enter your buy entries, another buy entry, another buy entry, another buy entry. So it becomes easier for you to trade when you are now using this equidistant channel. So here is another strategy that you can use to catch spikes when there is a bullish movement. This is why I was saying you shouldn't try to catch spikes when the market is now bearish. You can see the way it was spiking here. You lose a lot of money thinking that it's going to add more spikes. So avoid trading when the market is bearish. Only trade when the market is what is bullish, guys. So basically, that is what we are going to be doing. So now I'm not taking you to what to gain 400. You can see the market is still dropping. This is why I was telling you not to enter because the market is now bearish. So this is a chance for those people who like to trade ticks. They can enter and try to enjoy more ticks, and you have to take your profit fast. If you are a tick trader, make sure that you know what you are doing because one spike can cost you a lot of money. So make sure you know when to enter and when to exit. So now I'm now moving on to another pay, which is gain 400. So let's check gain 400 together so that we can see how to trade that pay. You need to avoid using the same strategy on all pairs, guys. They don't move the same way. Don't take the strategy that you are using on gain 400 and use it on gain 1200. It's very different. So here, this is our gain 400. So first thing, we're going to start with H1 movement. So we need to check the H1 time frame. So let's see how the market is moving on H1. So here we can see that the market was moving was going up, right? But suddenly it started to drop. So this is a sign again that the market can drop. It's hard for you to try to catch spikes here because the market is what is dropping. So let's check on a smaller time frame. So on M1, on the 1 minute time frame, I think we can all see that the market was dropping hard here. But now it's now looking like it wants to go up. But this is a trap because if you try to catch spikes here, it's going to go down to this point. So the best way for you to catch spikes is to try to wait for the market to reach this zone. So this is the zone I was talking about. You can see that around this zone, the market might respect this zone and start to go up. But this is not the time for you to catch spikes and hold. Why? Because the market is not bullish overall. So you are just going to wait for the trade to go down to this zone. Then you enter, you buy entries here. Then you add and wait for it to spikes. Here you are going to catch one or two spikes. Avoid holding the trades because the market is bearish overall. You can only hold the trade when the market is bullish overall. Let me look for a point like that. You can see here when the market is looking like this, This is where you can only hold the trade because you know that the market is going up overall. So avoid holding trades when the market is going down. So make sure you use that simple strategy the easy way. This is another strategy that you can use. I think you have seen it. You wait for the market to retrace to the zone where it started to spike. Because here it's just trying to trap you so that if you enter here, it will drop. So avoid entering trades against the trend. Make sure you're entering your trades according to the trend, right? So we are going to move on to another pay, which is Pain X400. So you need to master all of these things, guys. I want you to try these strategies and tell me whether it works or not. So here we have Pain 400. Pain 400, I noticed the one thing. Pain 400 is easy to trade spikes when the market is bearish. Avoid trying to make the trade 10. Let's say you're seeing that the market is bullish, then you're trying to make it 10. You lose a lot of money when you do that. So the easiest way to trade Pain X 400 is to wait for it to become bearish, right? And you have to know that this pay needs huge equity, because if you try to trade it using a small account, you're most likely to close your trades before taking profit or before it spikes. So you need to be using a very good account with more equity. So right, guys, what are we going to do when we are trading Pain X400? We use what we call the flag pattern. So let's say you're seeing that the market is dropping like this. You wait for it to create a flag pattern like here. What do we call a flag pattern? A flag pattern is when we have something like this where the market is dropping, then suddenly it retraces again. After retracing, it's going to cross something like this. So you're going to put your channel like this, your parallel channel like this, just to touch all the visible points. Let me try to zoom it so that you can see. Right. This only works when the market is bearish. Take note. So here you can see that it spiked and crossed this lower trend line. So here, this is where you enter your sale. So you catch these spikes, 1, 2, 3, 4, a lot of spikes. Then you can take profit whenever you want or whenever you see that the market is now retracing. So you're going to use this same concept on all scenarios when the market is bearish on the upper time frame, which is what maybe hourly time frame. I mean, so this is the hourly time frame. You can also see that the market is dropping, right? So this is where you can only use it. Avoid using this flag pattern when the market is bullish. So these are the simple strategies that you can use when you want to trade Pain X400 and gain X400 and 600. So I want you to try these strategies and tell me whether it works or not. I'm going to upload more and more strategies so that you can see the strategies that you can use to enter your trades. Thank you.